Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Trust deficit. Investors demand the highest yield on US 30-year bonds in a quarter century as government borrowing levels fuel concerns. A fourth week in the green. Chip stocks drive more gains in Asia as the AI rebound continues. Plus, Bloomberg learns that OpenAI is set to generate annualized revenue of more than $40 billion, bolstering the AI giant ahead of its planned IPO. Well, happy Friday, everybody. This is the picture in markets to end the week. Asian stocks adding to that fourth week of gains and futures pointing higher on both sides of the Atlantic as well after the S&P already closed a fresh high yesterday. The mood lifted by that latest US inflation data, reinforcing bets that the Fed's going to hold off on raising rates for another month. Markets now pricing less than a 40% chance of a September move. And tech stocks also extending their rebound. So we've got SK Hynix up more than 5%, Samsung up 3.4% as things stand, both up more than 15% so far this week. Now let's turn to the cross-asset picture, and you can see oil is holding above $87 a barrel this morning. We've had crude tankers continuing to exit the Persian Gulf, though, despite the limited diplomatic progress to reopen the Strait of Hormuz. Treasury yields are a touch higher across the curve. US bonds had rallied yesterday despite that 30-year auction selling at the highest yield in 25 years. The 10-year yield now at 4.65. And as ever, we're minding the yen. We're still within striking distance of 160 per dollar, even after Japanese Prime Minister Sanai Takaichi's government was said to support a rate hike. 159.35 per dollar is where we trade. Now, let's take a look at the risk events on the agenda for today. At 1:30 p.m. London time, we'll get the latest US retail sales. The street looking for a modest advance after a soft June print. Then at 3 p.m. we get the University of Michigan sentiment data. And today is the filing deadline for institutional managers to disclose their second quarter earnings. So expect a wave of 13F filings hitting after the close. Plenty before the weekend. Let's get you started. We begin with tech leading the way once again in the Asian session. Let's go to Winnie Xu in Hong Kong to see how markets are faring there. Winnie, what are you watching?
Yeah, good morning, Lizzie. Happy Friday. Well, we are seeing a pretty decent week for Asian stocks. Now, with the MSCI Asia here up a bit less than 3% so far this week, we actually had our very best week since 2 months ago. Now, supporting the sentiment is, of course, those latest inflation numbers from the U.S., indicating that investors are really walking their bets away in terms of the Fed's rate hike. Now, you can see that leading gains today are the tech stocks in our region, especially Kospi here up 1.6%. We are also seeing foreign investors coming back into the market with the net inflow for this week, also seeing its highest level since April. Now, the Japanese stocks also slightly higher, while the yen a bit stronger against the dollar, but we closely watch out for those risks for intervention as the yen remain just below that 160 level against the dollar. Now, flip the board, we take a look at the biggest gainers here in Asia, which are the memory chip stocks. We just look at how Kioxia here leading gains up about 4%. Similar gains when it comes to SK Hynix and Samsung Electronics coming after those bullish outlook from SanDisk. And investors really like those long-term agreements as well as the expectation for the stronger revenue and the cash returns. So those are supporting the sector here, while the weakness we continue to see are in the tech shares in Hong Kong, which is a trend that we have been seeing in the past few sessions already. As you flip the board and see how today's loss is really being driven by JD.com here, down more than 10% after the company logged its very first revenue loss since 2014. Now, this is coming on the back of that weak consumer demand. But remember, we do have Meituan reporting as well later today, down about 6%. So investors turning quite cautious. And in fact, those drags on the HS Tech here, down about 2%, is also headed for its worst week in about 2 months. But overall, earnings earnings showing that divergence when it comes to the weakness in internet names, but the strength in hardware names. And here you can see that hardware name SMIC here up about 2% after earnings showing a beat against estimate driven by the strong demand for chips. Back to you, Lizzie.
Renee, thank you very much for the update on Asia markets there. Now, we have some breaking news. This is the result of the Clacton by-election here in the UK, a special election in which the leader of Reform UK, Nigel Farage, was seeking to return to Parliament. Indeed, he has won a majority of the vote in this special election. He had triggered the contest himself. He stepped down as the local MP last month. It put a stop to the parliamentary investigation into his finances. He said it was up to the electorate to judge him, and the expectation had indeed been that the vote would give him this new mandate. Other major parties collectively sitting out of the contest, deriding it as a stunt. That left, of course, his main competitor, we might see him any moment, a man dressed as a trash can, known as Count Binface. And this was the largest ever field in a British by-election. 33 challengers to Nigel Farage in this vote. But yet, we could see more trouble ahead for Nigel Farage. Pollsters have been talking about Farage fatigue, not just fatigue with the scandals around his finances, but also as he has a threat from the Prime Minister, Andy Burnham, the new Prime Minister, talking about the cost of living, talking to the public, connecting with the public, and a recognition as well among senior reform figures that calling this Clacton vote made the party look evasive, made it look dependent on stunts. So later on in the programme, we're going to get full analysis from our UK political correspondent, Lucy White. But as we have it, the result is that Farage has won a majority of the vote in Clacton-on-Sea. Now, let's turn back to tech. And Bloomberg understands that OpenAI is on track to generate over $40 billion in annualized revenue based on its current performance. The ChatGPT maker's revenue has accelerated in recent months, roughly doubling its run rate from the end of 2025. For more, we're joined by our Bloomberg Markets Today editor, Sam Unstead. Sam, good morning to you. What's behind this uptick then in OpenAI's revenue?
Well, so very broadly, OpenAI and Anthropic and all the kind of leading names within the AI models and AI agents are all seeing an enormous rise in business, right? Because we've seen that through earnings season. We've seen very strong results across the kind of AI narrative. I think the thing to keep in mind with these two, with OpenAI, what we're talking about today, but Anthropic as well, the pair of them are kind of trading off at the moment and bolstering their own sort of strengths and bolstering up their plans for an IPO later in the year, for each company. And both IPOs are expected to be, enormous deals. So as they come up to that, I think you're likely to hear much more of this, of how strong those businesses are, how good the revenue run rates are, and then how good the outlooks are as well.
And meanwhile, Sam, you've had DeepSeek steeply raising the prices for its flagship V4 models ahead of a potential IPO for them as well.
Yeah, that's right. And so, most of this will be down to, as you come towards an IPO, you want to look as profitable and as strong as possible. It's worth bearing in mind that they've raised prices by about 4 times over, but they are still significantly cheaper, the sort of AI tokens from DeepSeek, than most of the other major players, including the likes of Anthropic. So yes, they have raised those prices, but that overall question and thread of how much cheaper AI can be from China, which has been seeping into the AI narrative over the course of the last couple of years, remains there. And I think once you do get to an IPO for DeepSeek, you'll get a much clearer idea of what their plans are and how that might well affect some of the other players in the market.
And Sam, we've got Nasdaq futures just slipping into the red now. Same for S&P E-minis, but it's a positive picture for European futures, and it's a positive session so far when it comes to the Kospi and Asian stocks. Mm-hmm. There's some of it coming back to optimism around AI. How much of that is down to what SanDisk said at its Investor Day?
Yeah, quite a bit, and actually SanDisk, has sort of capped off quite a good week. So, for the AI story in general, had quite a few earnings over the course of the week. Some of them are hitting up against very high expectations, and so the share price move may not look all that good. But actually, for the most part, the results have been very strong. And actually, SanDisk, when they reported recently as well, their shares fell because they couldn't get over a very, very high bar, but the results were very good. The outlook they gave yesterday kind of takes away a little bit of the nervousness about how sustainable all of this is. For these companies, they're operating on incredibly strong margins, but there's always a question of how long can this go on for. So them giving an outlook out to sort of 2028 has soothed some of those concerns, and that's what you're seeing come through in the Kospi, which is up by about 10% over the course of this week, and therefore ending a 7-week losing run. So it's really, the narrative has certainly turned quite a bit more positive, particularly on memory stocks over the course of this week.
All right, Sam, we missed you in London. That's Bloomberg's Sam Unstead. Thanks for coming to see us this morning. Now, let's turn to the macro. The US government has sold 30-year bonds at the highest interest rate in a quarter century. The yield at the $25 billion sale came in at 5.216%. The highest since 2001. Now, this is just a day after an auction for 10-year bonds drew the highest yield since the financial crisis. So let's get a history lesson now. We can talk to Ven Ram, cross-asset strategist over at Bloomberg MLive. Ven, these are historic comparisons. How much of an issue is this going to present for President Trump and US Treasury Secretary Scott Bessent heading into the midterms?
It's a huge problem for them, Lizzie, no doubt about it. Because, we have seen these, as you mentioned, these auctions are drawing the highest yields we have seen in a long time. And investors are basically saying a couple of things. We have no confidence that you will rein in deficits as you need to be doing. There is no fiscal prudence anywhere to be seen. The second message that they are saying is that, look, inflation is uncontained. We have had inflation. We have had an inflation overshoot in the US for 5 years now. And there is no suggestion that that's being brought under control. So if the Fed is not going to do its job, if the Treasury is not going to do its job to rein in deficits, then there is a price to pay. And that price to pay shows up at the longer end of the curve, where investors work in a term premium. And the term premium has surged this quarter. In fact, if 95% of the increase in the nominal yields we have seen this quarter has stemmed purely from the increase in term premiums, which is the extra compensation that investors want to hold longer dated bonds rather than just rolling over their investments in a shorter dated bonds. So the message from the markets is very clear. Unless you pay heed to deficit, unless you pay heed to inflation, we are going to send those yields marching higher and higher.
Ben, we've had another softer than expected inflation print yesterday, this time PPI. It's driven an easing of Fed hike bets. Markets no longer fully pricing a hike this year. I just want to play you what we've heard from Austin Goolsbee overnight on Fox News. Take a listen.
Inflation's been too high, and our progress stalled out a little bit and was going the wrong way. But now for a couple of months, we've been getting a little bit better readings, and hopefully that will continue. But we're in that delicate space.
But then when you've got a Middle East conflict that doesn't seem to have an end in sight, President Trump pivoting to Operation Economic Fury, is it that these numbers just mask an inflation problem that could continue for a long time? Do you still think that hikes may be needed?
Well, I definitely think a hike is needed because the Fed made a mistake by starting to cut rates too early. Look, what is the evidence so far on inflation that we've got? For 5 years now, inflation hasn't converged to the 2% target, and we are in a 3% perma zone, it feels like. And so basically, the Fed has not done what it needs to be doing, which is to raise rates and make sure that, Kevin Bosch keeps saying that inflation is a choice. If inflation is a choice, then the Fed has the answers, and they are not responding with the answers that they need to. They need to tighten monetary conditions, and they are not doing that. And in a world where crude oil is going to be hovering around $85 to $90 a barrel, you've got to have this framework where inflation is going to be in this 3% permanent range. And the markets are, which is why I was saying earlier that the investors are demanding a higher inflation term premium in holding longer dated bonds. So the Fed needs to act. And the longer that the Fed drags its feet, the worse the bond markets are going to be.
Ben, thank you very much. That's our cross-asset strategist at Bloomberg MLive. And we have been seeing the US 10-year yield holding above 4.6% for, I think it is 4 straight sessions now, even if it has been falling in August. 4.65% is where we are this morning. Well, it's still ahead on Daybreak Europe as heat waves grip Europe this summer. We're going to take a look at how drone-collected data is helping sharpen weather forecasts and giving traders and military strategists valuable intelligence. But first, drones are the focus of another set of new tariffs from the White House, and we'll bring you the details on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Trump administration is imposing tariffs of up to 100% on some foreign-made drones and components to reduce reliance on overseas suppliers, particularly China. The top 100% rate will apply to drones of a certain size or those that possess national security capabilities, while other imports will face lower duties. Let's get some more detail now. We can speak to Bloomberg's Rosalind Matheson. Ros, I wonder what this tells us about the state of relations between the US and China ahead of that Trump-Xi meeting later on this year. How significant is this new announcement?
Well, it fits a pattern of what we've seen as these kind of tit-for-tat actions on trade in the run-up to the summit. But that's not necessarily unusual. We've seen it come on the tech sector, drones, robots, the solar sector, and even things like pecan nuts as well. And that's just probably about setting out their stalls in a way before this meeting occurs and coming into that summit appearing in the strongest position possible, but doing it in a way that avoids tipping things over into a full-blown trade conflict. Again, we've seen these meetings between Xi Jinping and Donald Trump so far being an opportunity to really put a floor, if anything, under the relationship, and particularly when it comes to trade, and a moment to reset. So they want to avoid getting things, at a high tension level before that meeting. It's more about calibrated actions to show where their positions are going into that meeting. So we've seen it, as I said, on a bunch of different sectors. Some of these things won't be, that pleasing to each side. China won't be that impressed about the drone action. One particular drone company is a big part of the US market. However, they're probably going into this seeing the bigger picture.
OK, so maybe diplomatically it's just posturing, but commercially, in terms of national security, how significant are these measures? How do they fit into the broader measures that we've seen the Trump administration take to rebuild its tariff wall?
Well, they're all part of that effort to rebuild the tariff wall and to move away from using emergency powers to something that's potentially more legally robust. So using these section investigations under the Trade Act, a variety of things, including national security investigations. We've seen a whole series of those, and then we've seen the outcomes on particular sectors so far, and there are more in the hopper still to come. So it's using those investigations under the existing Trade Act to then deploy sectoral actions against other countries and making it therefore probably a bit more robust against legal challenge in the US. But also, again, what is the impact on consumers in the US from these actions, and how do you make sure that these individual actions don't disrupt your overall trade deals that you have done or you're trying to get done with other countries? So how can they fit in to that web of arrangements that you've got going, with the EU, with Japan, with other countries that you're still trying to get over the line, with countries like Vietnam. So it's quite a complex picture now on the trade side, but this is really about stacking those actions up again into a semblance of what was Donald Trump's trade wall.
It can be difficult when you're trying to provoke everybody all at once. Ros, thank you very much. That's Bloomberg's Rosalind Matheson in Singapore. Well, up next, a theme of the week has, of course, been Japan's campaign to revive inflation, lifting markets, boosting investor wealth. But for many households, rising prices are becoming a burden. The story of Japan's K-shaped economy is coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Japan's economy is showing signs of life, with rising wages and inflation just below the central bank's target of 2%. But while young workers are reaping the benefits, pensioners are feeling the strain of a higher cost of living and a weak yen.
On a Saturday afternoon, thousands of people packed this convention center in Tokyo for an investment expo, looking for new ways to build wealth, from real estate to cryptocurrencies to gold coins. Among the speakers, one influencer tells the audience she accumulated $431,000 in wealth while still in her early 30s. She used to earn only $1,200 in her 20s. She's part of a shift in how Japanese people are choosing to invest instead of save. For 3 decades, Japan unleashed economic stimulus while prices and the economy stayed flat. Now inflation is back around the central bank's 2% target, and it's looking like it's here to stay. With rising prices, profits are growing. Workers are getting the strongest wage gain in decades. The stock market is near historic highs, thanks in part to the AI boom. And with it, animal spirits appear to be coming back.
With everything happening around the world, I worry about my financial future, whether I'll be able to support myself while I'm working and after retirement. I wanted to reduce that uncertainty, so I became interested in investing.
The benchmark Nikkei 225 index has surged over 20% so far this year, and first-time investors who piled into stocks with the help of a government tax-free savings program have ridden the wave. It's helping fuel a growing narrative of Japanese dynamism.
Japan is back.
But there are fears that inflation is also worsening inequality. Analysis by Nomura shows consumption in 2025 for the top 20% of the population far outpaced that for other groups. Chieko Sugai lives in Murakami, a 5-hour drive from Tokyo. The 72-year-old widow finds surviving on a pension of around $670 a month increasingly difficult.
The
price of kerosene rose to 180 yen, and I was really shocked. That was what worried me the most. I used to be able to keep my heating cost under 30,000 yen somehow. But suddenly, I had to pay 36,000 yen. That took a big chunk out of the money I have to live on from my pension. It is quite hard.
Sugai isn't alone. This food truck driver sees a wider trend.
People used to shop without paying much attention to prices, but now they're asking, how much is this? And checking their wallets before deciding what to buy. Because many of our customers are senior citizens living on pensions, they're the ones hit the hardest. That's why we can't increase prices too drastically.
For households with lower incomes, the weak yen is expected to continue eroding savings.
A weak yen is great for the stock market because it improves earnings, but at the same time it's bad for the Japanese people because Mr. and Mrs. Watanabe is losing purchasing power.
A Yomiuri poll in July saw Prime Minister Takaichi's popularity plunge to 57% from a high of 69%. Among respondents, 71% said their major concern was the cost of living. Takaichi has sought to cushion the blow of higher prices with subsidies and has decided to suspend the sales tax on food. The question is how much those measures will resonate with Japanese voters. Sherian, Bloomberg, Tokyo.
Coming up, bonds under pressure after the costliest 30-year US Treasury sale in a quarter century. We'll talk markets next as we see yields up across the Treasury curve this morning. Futures pointing higher here in Europe. Good morning from London. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. trust deficit. Investors demand the highest yield on 30-year bonds in the US in a quarter century as government borrowing levels fuel concerns. A fourth week in the green, chip stocks drive more gains in Asia as the AI rebound continues. Plus, Bloomberg learns that OpenAI is set to generate annualized revenue of more than $40 billion, bolstering the AI giant ahead of its planned IPO. Well, happy Friday if you are just joining us. 6:30 a.m. here in London. This is the picture in markets to end the week. Asian stocks adding to a fourth week of gains and futures pointing higher on both sides of the Atlantic. Just in the case of the US session, we've just been chopping around and Nasdaq futures actually are in the red as things stand. But we had the S&P closing at a fresh high yesterday. The mood lifted by that latest US inflation data, reinforcing bets that the Fed's going to hold off on raising rates for another month. Markets now pricing less than a 40% chance of a September hike. But tech stocks also extending their rebound this morning. So Korea's Samsung and SK Hynix both up more than 15% so far this week and adding to those gains this morning. Now, if we flip the board over to the cross-asset picture, you can see Brent is still holding around that $87 a barrel level. Crude tankers are continuing to exit the Persian Gulf, it seems, despite the limited progress to reopen the Strait of Hormuz diplomatically. We also have yields higher across the Treasury curve this morning. The 10-year at 4.65, up a basis point. US bonds had rallied yesterday despite that 30-year auction selling at the highest yield in 25 years. But just also take a look at the yen. We're keeping an eye on it, still within striking distance of 160 per dollar after Prime Minister Sanai Takaichi's government was said to support a rate hike. Now, let's turn over to the front pages this morning, shall we? The Financial Times this morning leading on what it describes as a price war between OpenAI and Anthropic as the two US giants look to retain customers who are switching to cheaper alternatives from Chinese rivals. Let's also have a look at the Wall Street Journal. This morning it's focusing on the relationship between President Trump and Elon Musk as the tech billionaire plans to spend at least $100 million to support Republicans in this year's primary elections. And then if we come to Europe, in France, Le Monde focusing on the extreme weather hitting the country this summer and asking why the country's been hit by such a succession of heat waves. A question I've been asking myself here in Europe on these hot summer days, but you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find as ever by going to D8YB Go. Now, let us return to the bond market. And the US government has sold, as I say, 30-year bonds at the highest interest rate in a quarter century, which presents a headache for President Trump and Treasury Secretary Scott Bessent ahead of the midterm elections in November. Let's bring in Alexandra Ivanova, fund manager Invesco's fixed income team. Always nice to have you bright and early with us, Alexandra. We've been talking a lot about the Sell America debate. It seems to be back, not just because of the fiscal concerns, also because, yes, the inflation data might have been benign, but we're still above that 2% target. There's questions over, the Fed's commitment to fighting inflation. Then you layer on the geopolitics. I wonder for you, is it better to just be exposed to bonds outside the United States in this moment?
Well, I would say that I was quite lucky that I have reduced the duration, so it's not just in the U.S.
You've already
across
done it.
The world. Yes, but mainly with the view that it gives me enough room to add when we get this higher yields. I do think that we're getting to the levels that it is becoming attractive on the valuations, but you mentioned the willingness of the Fed to fight inflation, and that is key, at least for me at the moment, because I do think that as long as we are not sure what the action is going to be in terms of fighting inflation and what is the framework from the new chair is going to be, it's very difficult for me to see that the yield curve continuing to flatten. So it needs to steepen from here, and I do think that is driven by the long end continuing to sell off.
Well, where has the data this week left you in terms of your expectations for the Fed path for the rest of the year?
So we have expected that inflation will continue to come down on a headline level, and the data shows that labor market is quite weak, And this inflation print is also giving us some respite that I don't think that we're going to see this hike coming through. Maybe there is an argument that they have missed the opportunity to hike last meeting. And but we still have another print to come before the next meeting. And unless that is going to be substantially higher than expectations, I do think that we will see a hold.
But what about the geopolitical situation? We were talking about this with Van Ram. President Trump pivoting to Operation Economic Fury, which kind of makes it seem like higher for longer oil prices are going to be the reality. How does that factor into your asset allocation? Because if you were to get a deal on the Strait of Hormuz, as we all hope there will be, how would it change your playbook for the second half?
So I do hope we do get it more on humanitarian basis.
Exactly.
And it's just what I actually find is yield curve, the way it reacts is mostly on the front end, right? Because the inflation is going to be driven by higher oil prices, higher input prices, and that has been quite volatile. And I remember when I came here last time saying that the front end looks attractive, but actually we have learned that you have to be careful even in the front end. So in my mind, that if we do get some sustainable resolution to to this crisis, then definitely the front end should be considered somewhat attractive for me, especially if you're focused on income generation.
So you said you'd cut back at the long end across the board, really, because you're looking for opportunities. What do those opportunities look like? I'm thinking about the UK, to be honest, because we've had UK data this week. If you take out the volatility around the Iran war, if you've got weaker growth on the cards further out for the UK economy, doesn't that make it a situation that's supportive of UK bonds?
Absolutely. I do think that the UK, from our perspective, the Bank of England probably won't be hiking either. So as you say, the weakness will come through, and also the sensitivity to input prices, to energy prices is quite high. But if we do get some resolution, that is actually very conducive for Bank of England being quite accommodative. And having said that, the long end of all of the yield curves in the global sense, they tend to have much higher correlation. So it's a global phenomenon, and it's driven by mostly fiscal stance across the board. And I did have a view that maybe in Europe we might have some opportunities to go long in the long end. But in general, I do expect more issuance, and that is going to widen the long end. Issuance can come from actually corporates, not necessarily just sovereigns, and that's what being active. We kind of need to be prepared for this issuance to come and see whether the valuations are going to be attractive enough.
In the corporate space, you've had BNP Paribas saying that the sheer volume of big tech borrowing is pushing up the cost of debt across the board, whether you're an AI company or not. And I wonder whether that binge is becoming a problem for the whole credit market, not just for tech.
I know, but we have been talking for the last couple of years how spreads are tight. The spreads are very not volatile at all. Actually, has been quite an anchor for an multi-asset portfolio. But I do think that once you start pricing in more spread in a better quality hyperscalers, for example, these are AA, single A rated companies, then where does the low-rated credit needs to trade? Because you need extra premium for that extra default risk, extra credit risk. So having said that, the sheer volume of issuance and indebtedness in hyperscalers in the longer term, unless the returns come and the cash generation actually is materialized, that is going to deteriorate the balance sheet. So how do we express that in the spread terms? So that's kind of the market is debating where the right level of spread is.
And it's precisely the same question for equities, in the sense that when is the revenue going to come, the return on investment? Alexandra, it's always a pleasure to have you on the programme. Thanks for joining me. That's Alexandra Ivanova, fund manager on the fixed income team at Invesco. Well, coming up on Daybreak Europe, have you been up late for the count? The result is in from an unusual UK special by-election, so we bring you the details from Clacton-on-Sea next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:43 a.m. here in London. Now, the Reform UK leader Nigel Farage has won a special election in the seat of Clacton in South East England. Farage took more than 22,000 votes, a winning margin of nearly 13,000 over the second-place candidate, Count Binface. Now, the major parties refused to take part, leaving Farage facing more than 30 novelty opponents. And we can get the latest analysis with our Bloomberg political correspondent here in the UK, Lucy White, our reform expert in the House. Lucy, I just want to start off with the situation around the count, not Count Binface, the actual count, because Nigel Farage refused to attend the final declaration. He said that police warned him of an attempt to disrupt the event. But then Essex Police has said that it hasn't advised any candidate not to attend. What do you read specifically into that? Is it more of this kind of anti-establishment narrative that Farage seems to be trying to stir up?
I mean, obviously, we don't want to read too much into it. It's very possible that there was some sort of disruption planned for the count. I mean, obviously, we've seen a lot of attacks against or threats against reform politicians. We saw the death of Anne Widdecombe, their justice spokesman, a few weeks ago. But at the same time, it plays very well into Farage's hands if he didn't feel able to attend the count, because it's avoided all those awkward shots of him having to shake hands with all of these novelty candidates, including Count Binface, who does dress as a bin.
Yeah, that picture of him shaking hands with a bin, perhaps not what he wants on the front pages. But look, does it strengthen Farage materially, this victory? Because it was expected. And Clacton is surely his easiest audience. Could we still see trouble ahead for Farage on the national stage?
I mean, yeah, it's notable that some of the polling around in the run-up to this election showed that at a national level, voters would actually rather Count Binface won the election. I mean, obviously, that's not the case in Clacton, where Farage is incredibly strong. It's his heartland. But, there is trouble ahead because, there's the questions around his finances, there's the questions around his relationship with various aides. And it's very possible that will do him damage at a national scale.
Yeah, what's next on the finances investigation then? Now he's coming back to Parliament.
So the investigation was paused during the time that he stepped down. That's now likely to resume now that he is back in position. It could be completed in a matter of weeks. It could be longer than that. We don't know. It depends all what kind of gets added to that investigation. Originally, it was into the £5 million gift that he was given by Christopher Harborne before he became an MP in 2024. There's more and more allegations coming out every day around Farage's finances, so it could see the size of that investigation really balloon.
OK, and if he's ruled to have violated Parliament's rules, maybe we're back to this position with another special election, right?
Well, exactly, and that was Farage's whole reason for causing this by-election in the first place, was that he didn't want to have to face another by-election that was triggered by a standards investigation and that has more people competing in it.
OK, Lucy, thank you very much. That's Bloomberg's Lucy White. Now, let us turn to the weather. An unusually powerful El Niño is raising the odds that 2026 will surpass 2024 as the world's hottest year on record. Berkeley Earth also expects 2027 to set a new record, regardless, according to its monthly analysis of global weather data. Bloomberg's Weekly Doc takes a look at the heavy toll this year's Super El Niño has already taken.
The cyclical weather phenomenon known as El Niño has returned.
Wildfires in Europe.
More than 300,000 people have fled their homes in France and Spain.
Catastrophic flooding in India, or even New York City. Weather extremes in our world are becoming more frequent.
So scientists are worried about this El Niño for two reasons. One is the scale of this El Niño. It's perhaps the biggest they have seen in recent history. And when it is coming, which is in a world that is already 1.4 degrees Celsius hotter as a result of human-caused climate change.
El Niño doesn't roll around that often, so it's difficult to totally anticipate what the effects will be. But this has the potential to be a historic event in terms of its power.
The economic toll this El Niño will take may not be known for years to come, but looking into the past gives us some ideas.
In our daily lives, the oceans play a crucial role. They can drive our climate and our weather. El Niño taught us all about that.
The El Niño that ended in 1998 had a major effect on global economies. The damage was about $5.7 trillion. It rippled for 5 years after the event ended. Losses from the 2015-2016 El Niño also ran into the trillions, and kind of forecasting suggests we'll see that again.
And subscribers can watch that documentary in full right now on the terminal and at Bloomberg.com. Well, we have talked about the weather a lot this week, and as Europe is gripped by the fifth heat wave of the summer, firms are trying to get ever more accurate data to help forecast weather patterns ahead. Swiss firm Meteormatics is targeting one particular weather blind spot and providing crucial data to everyone from the army to traders. Joining us now is our weather and climate correspondent Joe Wirtz for more. Joe, what's the problem, first of all, that this company is specifically trying to solve?
So the layer of atmosphere closest to the Earth is called the boundary layer, and it seems surprising, but we don't actually make that many weather observations in this layer of atmosphere, which is curious because it's the one that affects us the most. It's the one closest to people and us and businesses and life on the ground. But it's poorly under the data that's collected here is spotty. We get a little bit from weather balloons. We actually also get a little bit of weather data from the air traffic and aircraft that move around in this layer. But Meteormatics is using drones to capture more data from this layer of atmosphere. And then that data are fed back into these weather models that give us a more accurate picture, more accurate forecast of what the weather is going to do, especially in that sort of 48 and 72 hour window. And that window is very important for defense planners that are planning military missions. It helps know where the clouds are going to be, where the snowstorm, how the snowstorm is going to shape up. Key things like icing on aircraft wings. And it's also a really important window for energy traders because this is where, they figure out how much sun is going to shine on solar panels or how much wind is going to blow at a wind park somewhere. And so energy traders are very keen on this data, too.
So this could be big money, actually.
Absolutely. We've got big traders that are very interested in this data and using these drones to collect this data. And the way this would work with these, the idea is that these drones could just, they come out of these little base stations, these little clamshell base stations open, and the drone flies right up into the air and flies back down. And that you could do this at scale. You could automate this, have these drones do this at certain times of the day, and you could have multiple ones doing it. And that would capture a lot more data than we're currently capturing in the atmosphere. And this would be fed back into the computer models and give them a much more accurate picture of the forecast.
And you've actually been to go and see these in person.
Yeah, I went to Oklahoma, actually, where my family is from originally, and went out to where they were testing these. It was a scorching hot day in the prairie of Oklahoma, but they were testing these out there testing these flights and testing the data that are coming off of them. And they're also testing them in Norway. I talked to some Norwegian military intelligence people that recently used weather models that benefit from this data for a big NATO exercise. It helped them plan around a snowstorm that they didn't see. And that's a critically important thing if you're flying a military mission You need to know how the snow's moving, the snow cover's moving, and it seemed to prove very useful to them.
We appreciate you going on the field trip for us,
sure.
Joe. It's really, truly fascinating stuff and just interesting that there are so many uses.
Absolutely.
Joe, thank you very much.
Thank you.
Bloomberg's Joe Wirtz there. Well, plenty more coming up on the programme. We're going to take a look at the charts that you should be looking at on the terminal this morning to frame your day ahead. Stay with us. This is Bloomberg.
Is the Bank of Japan going to be hawkish to support the currency? And heretofore, they've been a bit deliberate in terms of moving it. This moving in September to sort of stabilize the currency is a big deal. Intervention, I've watched intervention happen over time. You need to really keep going with a lot of firepower. I would argue it's not the most durable way to get there.
BlackRock's Rick Reeder there on Japan's options for stabilising the yen. And, of course, yesterday we reported that Tsunade Takaichi, the Japanese Prime Minister, and her government is supportive of a faster Bank of Japan rate hike. And yet the yen still holding around that 160 per dollar level, in striking distance of it. And it seems like the market agrees with Rick. Take a look at this chart. Yen volatility hasn't seemed to go anywhere. Traders essentially don't seem all that stressed about intervention whenever it may come. And what seems to be being priced is that the best authorities can do is slow the price of depreciation, hence the lower volatility going forward. Now flip the board over and you can see that amid that uncertainty, there's been an impact on exporters. Take a look at the autos, but this is something that applies more broadly. I'm thinking of the likes of Canon. This earnings season, lots of Japanese high-profile exporters that posted strong results still saw their share prices falling in the aftermath anyway, because of the worry that they're so reliant on a weak currency in order to boost their profits. Now, let's just finally, for our last terminal chart of the morning, turnover, completely different topic, but to the US inflation picture, because it's been a theme of the week. We've had PPI, we've had CPI as well, both falling, and yet the cost of capital not getting any cheaper. Inflation cooling, but money staying expensive. The 10-year yield still above 4.6% for 4 straight sessions now, even if it has been falling overall in August. And we had Fitch simultaneously affirming the US's AA+ rating, but also warning on higher rising US debt levels, reinforcing the structural narrative that's keeping the long end elevated. The opening trade's up next. That does it for Daybreak Europe. Skylar, Tom and Guy will take you all the way to the European Cash Open. Have a great weekend. This is Bloomberg.